Good evening, everybody, and welcome to our weekly session. So today we'll be looking at the major events that have been happening within the course of this fourth week of January 2023. So some of the events that have been happening is the US government hitting its 31.4 trillion borrowing limit last week on Thursday. And this caused a row between the Republicans and President Joe Biden's Democratic Party over raising of the country's debt ceiling. So the House of Republicans are pushing to have Joe Biden administration to cut spending before they approve a higher ceiling or before they raise the ceiling. So a similar occurrence had occurred way back in 2011, which caused S&P to cut US credit rating for the first time in a long time. And this caused chaos in financial markets. So this deadlock is widely expected to last long and could come down to the last minute as each of these sides and others ahead of the June deadline may cause Treasury to be out of options. So these may therefore culminate into a crisis in the administration. Other things besides the standoff in regards to raising the debt ceiling has been tech earnings. So this week we've been expecting a lot of earning reports, mainly in tech companies. So earnings during the course of this week will test the bounce in technology stocks amid questions over whether big tech companies can increase revenue and profits by extension while cutting costs. This is against the backdrop of US economy showing signs of a slowdown and a possible recession in the coming months. And several big companies are gearing up, or some of them have actually made their announcements for the last quarter. Mainly, these have been telecom companies, aerospace, airlines, and especially investors have been waiting to see how the companies will perform or how companies have performed in the last quarter. So some of these companies would include Johnson & Johnson, GE, Lockheed Martin. We have Verizon, as well as Microsoft. So these companies were to post their quarterly reports this Tuesday. Then today we had AT&T, Boeing, Tesla, and IBM posting their quarterly results. Tomorrow, we are expecting Comcast, Southwest Airlines, American Airlines, JetBlue, as well as Intel to post their 2022 quarter four results. Now, these quarterly earnings have had a lukewarm start, and according to Refinitiv, which is a research company, S&P 500 companies are expected to post an overall drop of around 2.9% in the fourth quarter earnings versus a year ago period where there was a decline of 1.6%. Now, over and above earning reports for those companies that I've mentioned, mainly in the tech space, depending on how those companies are going to perform, that may also affect the performance of NASDAQ, because some of the companies or some of the names that I've mentioned are big tech companies, and they contribute around 26% of the weight of the NASDAQ index. So they may therefore influence the performance of NASDAQ for the better part of this week and maybe in the coming week. The other issue has been the looming job cuts in the technology sector. So last week on Friday, Alphabet, which is the parent company of Google, revealed that it will be cutting around 12,000 jobs. And this is around 6% of its total workforce. And besides that, we also had Microsoft last week on Wednesday, revealing as well that it would eliminate around 10,000 jobs. Amazon also made an announcement that they would lay off around 18,000 people across the world. So the main reason for these announcements of job cuts has been due to the fact that both large and small tech companies went on an aggressive hiring spree in the recent past few years due to the high demand for their products, mainly software and services. And this was due to the fact that these services and products were increasing in demand as more and more people continue to work remotely, more so during the height of Corona within the last 3 years. Other companies that have announced their intention to lay off part of their staff would include Snap. So this is way back in August 2022. So Snap is the parent company of Snapchat. So Snapchat is a social media platform. So it said that it was to let go around 20% of its staff, which is around 5,600 people. The other company was Robinhood, again in August 2022. So the company whose app has helped a lot of people to access financial markets. So this is an investment platform. It announced that it would reduce its headcount by about 23%, and this is approximately 780 people. In November 2022, we had Twitter as well laying off around 7,500 people after Elon Musk bought a sizable portion of that company. Lyft, which is a ride-hailing service technology company, in the same month also cut off 13% of its workforce, which accounted to around 700 people. Meta, which is the parent company of Facebook, within the same month also laid off around 11,000 people, which accounted for 13% of its total workforce. This month, January 2023, we've had Amazon, the e-commerce company, saying that it's going to cut 18,000 positions. And that is just a fraction of its 1.5 million strong global workforce. Salesforce has also laid around 10% of its workforce, and that is about 8,000 people. Coinbase, which is a cryptocurrency trading platform, has cut approximately 20% of its workforce, or around 950 jobs. And this was the second round of layoffs in less than a year. Spotify, which is a music streaming service, is cutting 6% of its total global workforce. And it did not give a specific number of jobs, but considering that they have around 6,600 employees, this would be something close to the range of 400 jobs. So all these issues are likely to reflect on the performance of technology sector, and by extension, the performance of NASDAQ in the coming weeks. Now, tomorrow, which will be on Thursday, we will have US economic data. So the US will publish its first estimate of the fourth quarter gross domestic product, and analysts are expecting the economy to have expanded by an annualized growth of 2.6%. In comparison to 3.2% in the third quarter of 2022. Now, while this appears as a strong performance, more recent economic data has pointed to the economy losing momentum at the end of 2022. So if you look at retail sales, they fell by 1% in the last 2 months. Industrial production declined for the past 3 months of 2022, and residential construction also posted a decline in the last 6 months. So GDP is expected to weaken in the coming quarter if Federal Reserve is to continue with its aggressive rate hiking, as this will put strain on companies across the economy to access credit. And by extension, if companies are accessing credit at an expensive or at a higher rate, then most companies will tend to shy off to borrow in order to expand their production. So the economic calendar also includes data on initial job claims, durable goods, orders, and new home sales on Thursday, and the personal consumption price index on Friday. So I think at this point, I'll just share the economic calendar of the week so that we can have a sense of what I'm talking about. So yeah, so we have core durable good orders month on month. So this metric basically measures the changes in the total value of new orders for long-lasting manufactured goods, and this excludes transportation items. So a higher reading for this metric indicates increased manufacturing activity, which is favorable to the dollar, while a significantly low than expected reading would obviously have a negative effect on the performance of the dollar, and by extension, the majors. Then we also have US initial jobless claims. So this metric tracks the number of individuals who have filed for unemployment insurance for the first week of the month. So higher than expected reading is a negative, or would tend to have a negative effect on the performance of the dollar and its crosses, while a lower than expected reading would tend to have a positive effect on the dollar. Then we also have new home sales report. So new home sales tends to measure the annualized number of single family homes that have been sold during the last 1 month. So this report tends to have more impact when it's released ahead of the existing home sales, because these reports are sort of correlated. So should we have a high reading for this particular metric, it's likely to cause appreciation in the dollar against its crosses, but a lower reading than that which is expected is likely to cause the dollar to weaken. Moving into Friday, European Central Bank President Christine Lagarde will be speaking. So there will be a speech. So European Central Bank President Christine Lagarde is expecting to hold a press conference this coming Friday, the day after tomorrow. And as the head of European Central Bank, she's the one to set the short-term interest rates, and she has a major influence over the value of euro. So most traders tend to watch her speeches closely, as they are often used, or most traders would tend to pick those subtle hints as to whether she'll be looking into continuing to raise the rate, or whether indeed she's likely to have dovish sentiments in the coming weeks. Besides that, we will also have US core PCE, price index. So this is a metric that measures the changes in prices of goods and services purchased by consumers for the purpose of consumption, and it tends to exclude food and energy products. So prices are weighted according to the total expenditure per item. So it measures price change from the perspective of the consumer. So it is a key way to measure changes in purchasing trends and inflation. So when we have a high figure, it basically means that inflation is on the rise, and that would obviously cause, or it's likely to cause, the dollar to gain value against its pairs, while a lower than expected reading would obviously mean that inflation is declining, which would then cause the dollar to weaken against its crosses, or against its pairs. Then today, just trying to share something here. So today we saw Australian dollar performing quite strongly against its crosses. So we had announcements relating to Australian dollar consumer price index. So the numbers were quite good, and if you look at Australian dollar pairs, you'll notice that it was getting stronger across the board, mainly Australian dollar against New Zealand dollar. So if I can share that chart, you'll be able to see that Australian dollar gained a lot of ground against New Zealand dollar. So I'm just trying to share the screen. Just bear with me. So you'll be able to see that if you look at the performance of Australian dollar against New Zealand dollar earlier in the day, during Asian session, it posted a very strong performance. So that performance was attributed to a very strong data on the Australian economy. So we had Australian economy reporting a strong figure for inflation earlier today. That was a similar case with Australian dollar against Canadian dollar. There was a significant rise in this pair in the early hours of the day due to that announcement in relation to inflation. Then yesterday, you will notice that we had UK Purchasing Managers Index numbers, which were released during London session. So Purchasing Managers Index usually measures, or it acts as a leading indicator of the overall economic performance, as it tends to collect views from different industry heads regarding their perception on the performance of the economy, mainly the services industry and manufacturing industry. So when they give an optimistic view in regards to how the economy is likely to perform generally going forward, then it acts as a strong indicator going forward that the economy might expand. So the main metric is to have that data exceeding a reading above 50. So a strong reading above 50 would indicate possibility of expansion in the economy in general. A reading lower than 50 would obviously mean that there would be poor performance across different sectors of the economy. So the numbers came quite weak, and that caused the pound pairs to be quite weak for the better part of the day. So if you look at the performance of GBP against yen and GBP against Kiwi, you'll be able to see that yesterday those were the weakest, or those were the pairs where we had strong moves to the downside in favor of yen, since pound was weakening as a result of the poor or the decline in purchasing managers index and numbers. So this move persisted within the London session and the better part of, or the early part of New York session. So this was a very big decline in this pair. So the move was close to 130 pips. Then if you look at GBP against Kiwi yesterday, again, we had a very strong decline in this pair. So it declined by roughly 150 pips during the better part of London session and heading into New York session. So basically, that has been or those were the major events of the week. And I hope you'll be able to follow the events which will be posted tomorrow and on Friday. So though this week has not had very many events, you can follow up on the events which I've mentioned, which will be posted tomorrow and on Friday as well. So basically that's it. And this would mark the end of our session today. I hope you've been able to learn something, and you will find it useful as you make your decisions in regards to your trading activity. As we always say, this is not an advice, rather this is to arm you to make better decisions as you analyze the market in order to identify you to the right positions to take. So that is all for today, and I wish you all a very pleasant evening. So see you all, and hope to see you soon.